Welcome traders to another episode of T2 SMC Trader. So if you are a London guy, that means you love to trade in London session, this video is going to help you a lot. Make sure that you have watched until the end of this video. Don't forget to give me the thumbs up and subscribe to my channel if you are new. Let's go to the video. This is London session from Tuesday. I would love to explain the price action around here. Now before going over there, what I always keep telling, that is London session liquidity. What is actually happen around the London session? London session has two type of intention. I keep telling this, so I'm gonna tell this again one more time. Either London make the liquidity or it takes the liquidity. 95% of the time market actually make the liquidity around the London session. Now what is making liquidity? Either relatively equal lows or relatively equal highs. That means I need at least two low or two high, which is going to create around the London session. Not 100% of the time, but 95% of the time, London session make the liquidity. If you just know this information, it's gonna be very easy for you to trade London session. Over here, I have this small price action from hourly chart for Nasdaq. You can see this was the relatively equal lows. That was my target yesterday. Market has taken this relatively equal lows. Below this relatively equal lows, market has this anti-fair gap from hourly chart and the last fair gap over here. As I told, market always go for the liquidity. After taking the liquidity, it needs a resting place. That means a fair gap. That should be either an anti-fair gap or it can be the last fair gap. What else do you see over here? Market has been traded this entry fair gap, constant crossment. Okay, constant crossment and the low has been traded here already. If you have watched my yesterday's video about from the London session, you know a lot of the information. Now, if you missed it, I suggest you to watch that video because this fair value gap information is extremely important. So when market has traded the constant crossment and the low perfectly, what left? The high. What happened over there? Market came here, tapped to the high. Look at the bodies. How beautifully it reacted from the high of this anti-fair value gap. I outlined a trade in my Twitter from that area. Okay, so that was the reason for framing that buy setup because of seeing this price action. Don't just focus the current price action. What is happening over there? Don't just focus only over here. Also focus in the previous price action. I'm just going deeper step by step. Previously, I never talked about this, but now these days, I'm talking about here to look after the previous price action. That's how you will go into the deeper price action. I believe that you are already ready to go this much deeper. Okay, so here, constant crossment rejection, lower rejection has done already. Then I got the high rejection. You can say, brother, weak reach until this constant crossment of this anti-fair value gap. Now look, it didn't tap to this constant crossment and the bodies, how beautifully it has been reacted from the high. Over here, if you look at this body is much more higher than this anti-fair value gap, but the weak, look, low constant crossment. See, it was trading this fair value gap by weak and now it is trading by body. That is the first step, and as I know that market is going to make the liquidity out the London session, so I will show you the liquidity when I'll be in 15-minute chart. But before that, I would love to show you these two fair value gap around that area. This is the anti-fair value gap, this is the last fair value gap to that specifically. Okay, above here I have the extreme last fair value gap. That means market can reach until this last fair value gap. Let me mark the last fair value gap over here. And it can reach until this last fair value gap, then it can fall again. It can fall again from there before taking this buy side liquidity. Keep that in your mind. Excuse me. I'm sorry. So I have this clean buy side liquidity over here. Below this buy side liquidity, I have this last fair value gap from hourly chart, and to that specifically, I have these two fair value gap. That is also important. Right now, market is trading over here. Still market has made this bullish fair value gap. I believe that market will tap to this bullish fair value gap, then it will keep going higher. Okay, it will keep going higher for this buy side liquidity. That is my so far expectation. That is also important in the New York session. So when I'll be in New York session at 9 a.m. local time, New York local time, I will explain the price action over there. Here I'm only trying to explain the London session. So let's go to 15-minute chart. So over here I'm in 15-minute chart. This is the London session. Okay, this is the starting of this London session. This down close candle, see this down close candle, this is the starting of the London session, and over here this is the end of this London session. So this candle is the end of this London session. So market first fall, then it went higher. When market was going higher around the Asia session, and also before the London session, what was happening over there? See this down move. To that specific down move, I had this anti-fair value gap over here. Let me mark the anti-fair value gap. It's a very big anti-fair value gap, and the last fair value gap over here from 15-minute chart. Okay. Now, if I see this type of big anti-fair value gap, I actually go to 5-minute chart to make sure that the anti-fair value gap is compromised. Okay, so as it is a very big anti-fair value gap, I will just minimize that anti-fair value gap from 5-minute chart, and I will come here and I will mark this fair value gap as my anti-fair value gap from 5-minute chart, and I'm going to 15-minute chart on time. Okay, so I minimized the bigger I just break the bigger fair value gap into a small portion. So this is the last line of the anti-fair value gap. While you can see market reach until the high of this anti-fair value gap, then it fall. When it fall, there was your market structure shift. Market has taken all the buy side liquidity, and then it has given you the market structure shift over here. That is the market structure shift. Now, as I have a lot of fair value gap over here, I'm going to remove this one. All you know that market was reversing from the anti-fair value gap, and it didn't tap to the last fair value gap. I'm just going to remove both of this fair value gap. Okay. So after the market structure shift, what do you have? This fair value gap over there around that area. Okay. So this is your new fair value gap. If you really would love to see that market is going to fall, why market will fall? Because I have this relatively equal lows. Why do I have that? This low and that low. They are relatively equal lows, which is your sell side liquidity. Okay, so I'm just going to mark it as a sell side liquidity, and I have this extreme low here. Okay, so it has taken this liquidity. How did it take it? Shallow run. I will explain this thing when I'll be here. First, let me explain here. Inside the London session, market fall dramatically. That is called the displacement. After taking all of the buy side liquidity, there is no buy side liquidity left over there. Trade the entry fair value gap, gave you the very nice market structure shift and the fair value gap. When market reach to this fair value gap, what should you look for? A sell setup. Now you should go to your 1-minute chart. Now I'm in my 1-minute chart. In my 1-minute chart, you see this is the first time when price reached inside this fair value gap. After the shifting market structure, this is the fair value gap. What do you see more over here? Okay, what do you see actually? You see market went higher. Did it close this anti-fair value gap? No, not the anti-fair value gap. I'm sorry, the bearish fair value gap from 15-minute chart. It reached until that area. What do you see over there? The last fair value gap from 1-minute chart. Over confirmation, right? Last fair value gap from 1-minute chart. I have already shown you how to use this last fair value gap. Now I'm going to remove it, and I'm gonna make a box actually instead of that line to show you more precision over here. Just look, and let me now, you know that market was inside this 15-minute bearish fair value gap. So I'm going to remove this one. Where did it reach? To the consonant crossman. Did it work with the upper portion of this last fair value gap? No, it worked with the lower portion. Body closed just to the low of this fair value gap. Wick reached until the consonant crossman of that 1-minute last fair value gap. What you are looking for? You are looking for sell. Why you are going to look for sell? Because you have this sell side liquidity around that area. You have this sell side liquidity. Okay. Now that is your 15-minute extreme sell side liquidity. Obviously, you are not going to hold your trade until that sell side liquidity. Instead of that, you will always look for some kind of relatively equal lows. That's gonna be your sell side liquidity. Okay. But before that, I would love to show you something else. Market fall, went higher, trade that 1-minute last fair value gap. When it came here, exactly where did it came? it has taken all of these sales and liquidity. Just look at this relatively equal lows, this low and that low. They are relatively equal lows. Market has taken this relatively equal lows, and I'm just gonna use this line. Okay, I'm just going to use this line and another line over here. What is that, brother? Can you see what is that? You know that. What is that? Go to your chart and mark that on by yourself. It tapped over here. This is called the reaction. From your higher time frame, you are expecting that market will fall from your higher time frame, right? Now you saw that it reached until that fair value gap, entry fair value gap, and then the reaction sent the price until the last fair value gap over here. When it reached until the last fair value gap, I will watch how it is reacting to that specific fair value gap. If it worked with the upper portion, I will start to think that market is actually going higher. That means if the body reached until the upper portion of this 1 minute last fair value gap, I will start to think that market will keep going higher. But perfectly, it reached until the consonant crossment, body closed at the level of the low of this last fair value gap from 1 minute chart. So let me mark it as my 1 minute last fair value gap. After that, I'm looking for sell, right? This is the displacement. Now, here is the question. Is that swing low valid for shifting market structure? Over here. Is that valid for shifting market structure? This low. It's valid or it's invalid. It will depend on the video I have made in my YouTube channel. In my opinion, this is not market structure shift. In my opinion, this is not market structure shift. I'm just repeating this one more time. In my opinion, this is not market structure shift. But if you see over here, perfectly, market has traded this entry fair value gap, and this should be your breakaway gap. Okay, so that should be your breakaway gap. This, if you mark this one as your market structure shift, where should be your entry to this entry fair value gap? Here, where is going to be your target? You are going to target these lows, relatively equal lows. You are not going to hold your trade until here. Instead of that, you should look for some kind of relatively equal lows or the last fair value gap from 1 minute chart. So from 1 minute chart, this is your relatively equal lows. So that should be your target. That means your entry will be here. You will cover the breakaway gap and your target will be there. When market will below this low or it will tap to this fair value gap one more time, you will take the partial. Okay. Not good. 1:1.95, and it's still this is 18 handle only. So I think that you will start to think it's not a good setup. But around the London session, 15 to 20 handle is more than enough. Trust me, brother, because it's a very slow market. Though it's look like so volatile run, but it's not volatile market. So here 15 to 20 handle, if you can manage that, it's more than enough. Okay, now I'm going to remove this one because this market structure shift is not valid according to my rules. So I'm not interested to take that entry. At the same time, I know it is inside that 15 minute fair value gap from 15 minute chart. Remember, I just removed that 15 minute fair value gap. Let me go to 15 minute chart one more time and let me show you that. Here, this 15 minute fair value gap. Okay, just here to here. Look, this is that 15 minute fair value gap. I'm going 1 minute chart one more time. Sorry, yeah, 1 minute chart, and there is that 15 minute fair value gap. So what else do you see? You can see that market reached until the high of this 15 minute fair value gap. I was expecting that market will tap to the low, constant crossment of that 15 minute bearish fair value gap, but it didn't do that. This entry fair value gap hold the price, send it back lower again. One more time, it sent it back. When it fall here one more time, now I got my market structure shift over here. This is my clean market structure shift, and I will just mark that one. This is my market structure shift. Where is your fair value gap? This is your entry fair value gap over there, and this is your breakaway gap. Sorry, let me mark it clear over here. This is your breakaway gap. So you will take your entry to this entry fair value gap. If it is the immediate reaction, you will take your entry over there. You will cover the breakaway gap. Now, if you just cover this breakaway gap, you have to keep that in your mind how to use this 15 minute fair value gap. That means though it didn't reach until the constant crossment, but it can tap to the low of this 15 minute fair value gap one more time. So you have to just cover the low of this 15-minute bearish fair value gap. That's all. You have to just cover the low. If you are wrong, if really market would love to go over there, you're going to take a 7 handle loss. But either way, you should just cover the low of this fair value gap. And you can see market actually reached until that area. Trade this order block because this was your main setup over there. That was the main setup. In my opinion, the market structure sheet is not valid. That's why I didn't participate over there. But either way, market used that low as the market structure sheet. Market doesn't need to follow the perfect rules, but perfect rules are for us so that we can avoid losing trade. So over here, that should be your entry, that should be your stop loss, and you can target this low. I mean, if you want this low, but as I can see, market is very near to this sell liquidity. All I will do, I'll just look for the last fair value gap over here. So you can see a leg, retracement, another leg. So in that leg here, I have this last fair value gap around that area. So I am going to mark this area at the same time, this relatively equal lows. That's gonna be my target. But obviously I will take a partial over there. I have to take a partial over here. Okay, there is no other way without taking the partial over here because this is very clean liquidity from 1 minute chart. Market can easily take that liquidity and then it can reverse. From 15 minute chart, I'm expecting market is going to take this sell liquidity, so I can, it's safe, okay, until that area. Now you can see its risk to reward ratio is 1:3.6, not bad, still 25 handle. If you take a partial over there, it's very nice setup. Okay, so that was the only setup around 3 a.m. where actually we expect the volatility. So this is your volatile area, and this was the perfect setup from the London session today. I didn't participate in this run. The reason was I was not interested to trade today's London session, so I didn't trade it. But I'm explaining the price action. Okay, so you can say this is a hindsight, but brother, I'm doing this in live every single day. Then market take this liquidity, went higher, came lower. Okay, it reached until that area. It has taken this sell side liquidity, reached until that area. Now I'm going back to 15 minute chart one more time. I'm in 15 minute chart one more time, and I'm going to remove all of these things because I have already explained that, but you can mark them on your chart and you can study them. Okay, so it reached and it has taken this sell side liquidity. Remember this low and that low. Now what do you see? This is just a shallow run. I'm expecting that market will reverse from the high of this fair value gap because market has already traded this fair value gap, constant enforcement, and the low. So let me show you that the constant enforcement and the low has been traded already. So left, what is left? Left is the high of this fair value gap. So I'm expecting that market will reject from that high. At the same time, the wick will make relatively equal lows. Over here, it has made obvious liquidity. That means it has taken that low by a shallow run. And what did I tell you about the shallow run? If I see the shallow run, that is my obvious liquidity, and I just mark the low as my sell side liquidity. So I have this new sell side liquidity, and I'm very much confident that market is going to leave that for the new work session or the 7 a.m. kill zone. The reason is this is London session. Market 95% of the time market make this liquidity. See this buy side liquidity, market has made that buy side liquidity around yesterday's London session over there. So please go back and do your own back test for understanding the price action. I believe that it will help you to get more confident about what I'm telling you over here. So market came here, made this obvious liquidity, then it went higher. I was expecting the rejection from the high, so I will start to look for a buy setup from there. So let me go to 1 minute chart now. So when I am expecting the buy move now, I will just first see that it has taken all the liquidity has taken over here. So let me mark it as the liquidity taken. All the liquidity has taken over there. After taking the liquidity, this is my market structure sheet. This is market structure sheet. Is that valid? Absolutely, brother. That is a perfect, very clean, nice market structure sheet. If you are confused, maybe you can mark some other swing high for shifting market structure, but in my opinion, that was a perfect market structure sheet around that area, and there was the fair value gap. There is your fair value gap around that area. Okay, And you can see market failed to tap over there. So here you have to take the close approximately entry, though I didn't take this entry. Instead of that, I just outlined everything in my Twitter. So if you are with me in my Twitter, you have already seen everything. Okay, so it failed to reach until this fair value gap. I am expecting market will go higher. At the same time, where is my buy side liquidity? From 15-minute chart, I have this extreme buy side liquidity here. Okay, so I just can't use that one. I have the buy side liquidity, so it's not a random entry, and I'm not taking any randomness, anything. But instead of that, I would love to use the standard deviation. So I just will mark this and that as my standard deviation. Why this leg? Low, high, lower low, the middle leg. It's important, the middle leg. At the same time, high, low, higher high, high, low, higher high. This is my breaker block. Just watch my Twitter. I marked it as my breaker block. I just didn't get any opportunity to take entry, so I tried to take entry from there. Then I tried to take entry from there. I just didn't get any opportunity, but I outlined this setup. Now I wasn't overzealous. I was not in rush, so I didn't participate in this price action. If I wanted to participate in this price action, trust me, I could catch that one because I knew that market is going higher at least until this parabolic gap from hourly chart and from 15-minute chart. This is the last parabolic gap, so I'm leaving that market will reach at least until this last parabolic gap. So I was very much confident about that entry. Even if I could take that entry from here, my stop loss would be below there and my target would be minus 1.5 standard deviation. Okay, so that would be my trade. 1:3 risk to reward ratio. If you really know that how the London session make the liquidity, this entry is absolutely so beautiful and so confidential entry for you. It's gonna be confidential entry for you. Okay, so make sure that you understand how to use the fair value gap. And let me go to 15-minute chart on time. Sorry, not 15-minute, hourly chart. So if you really know how to use the fair value gap, constant encroachment and low rejection, so it should be rejected from the high. This is how you are going to use this fair value gap. At the same time, you are in London session, you know market is going to make the liquidity, so it has made this obvious liquidity. Now it is going higher. Why it is going higher? Why it is going higher? To trade some imbalances. At the same time, it's gonna take some swing high, which is also the liquidity. Okay, so then finally I believe that market will take this buy side liquidity or something like that. We will see that in the London session, New York session. This bullish fair value gap from 50 hourly chart is now my priority, and I believe that market will tap to this bullish fair value gap, then it will keep going higher. At the same time, this highest up close body close candle is my breaker block, so I will keep looking for them for the buy setup. So that's all for this video. I believe that it's gonna be little insightful for you guys. If it is, then don't forget to give me the thumbs up and also subscribe to my channel if you are new. So until the next video, cheers.